The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. Tom O'Brien. We appreciate you growling and prowling with us out here. Right now, you got the Dow down 24, Nasdaq off 13, S&P's flat. The whole market might as well be flat. But as we go through some of these numbers, man, you're not going to believe some of these stocks, how they've got hit. I mean, they're big hits. Gold's down $23, trading at $11.52. You get silver off 57 cents at $15.72. Copper is down 2 pennies at $2.34. The bond market, 10 years down 13 ticks. 127.25. The 30's off a point and a half at 156.24, and King Dollar's down 331 ticks at 97.53. Now, you know, we're just starting the show, and Tommy's looking over and says, "Man, look at these numbers, folks. This is like so bizarre." You know, Larry was talking about this on his show this morning, right? Okay.
And I caught like some of his, but I didn't catch this.
The market's flat.
Yeah.
Okay. Now, if you're watching Target TV, you can see the movers. Okay.
That's some big negatives.
But as you're driving in your car on the West Coast, well, I'm going to give you some of these. Like, it is pretty sick. I mean, you're talking about individual equities that not only are down, but they fell out of bed. I mean, people wake up in the morning. You got Buffalo Wild Wings down $30, so 16%.
Yeah, put it in percentage terms, because that's what blew me away.
It's sick.
Yeah. Just all of them as you go down. That's
what really blew me away. Now, I've talked about this a few different times, okay, that you have these stocks that are falling out of bed. And granted that the bull case, you can make the bull case that, guess what, Amazon and Google went up. But every single day we have 3 or 4 that fall out of bed. Yeah. Today is insane. Today, Buffalo Wild Wings is down 16. You have what is that?
A Biomed?
A Biomed's down 20.
20%.
20%. Right. NXP Semiconductors down 17.3%. Straight Path Communications is down 31. Intercept Pharmaceutical is down 5.9.
GNC's down 21%. and ETI Consulting's down 17%.
Look at this.
Yeah.
Freescale Semiconductors down 14.6.
What's interesting, too, is it's not just, it's semiconductors, it's biomedical, it's Buffalo Wild Wings.
Yeah.
It's not just like a semiconductors are getting smacked, or the biomeds are getting smacked, or...
Build-A-Bear Workshop, 22%.
What is driving all... I've been running around the office, and I haven't looked at the market too much.
It's this... Well, actually, so let's look at that, okay? So inside the... inside the NDX 100. Let's look at the NDX 100.
It's got to be a reason for 20% moves, right?
That's all earnings.
Every one of them?
I believe every one. We can go through them, but I believe every one of them. So
I'm sure some affect others, but there's definitely a few different things going on because they're completely different sectors.
No, they are.
Yeah.
They are. So NXP is the leader on the way down. That's down $15.75. AFCO, okay, now AFCO, what has happened with AFCO is this. AFCO is an Apple supplier. And on a longer term basis, every day when we look at AFCO, what has happened is this, is that we pull it up, and one day it's the leader inside the NDX 100, and then the next day it's the laggard.
Yeah.
Bottom line is that you're at 121 and you're off the highs of 140, 150. So
that's probably similar to exactly what Apple looks like, right?
It is. Yeah. If we pull up Apple right now and just look at Apple, it's almost the same chart. Inside the rest of the NDX, you got what's that? Monster Beverage is down $6, and this is another Apple supplier down $2.66. Now, putting the juice inside the NDX 100, even though it's down slightly here, is Mylan Pharmaceutical up $2.66. Win, which is up $3.80. That's been a huge problem stock. That's down from $200. Now, this is a powerhouse. O'Reilly Automotive. This baby here has been, it's amazing. I mean, this was a powerhouse when the
Jeez.
I know.
What
This
a
is
chart.
This chart, folks, that we just put up. Okay, so if you go back to 2008, it's at $22, and now it's $2.76. So what was so intriguing about this company in general is that, and the depression or recession, whatever you want to call it, what happens is that people weren't turning their cars in, so they sell a lot of parts.
Okay.
This is the parts cart, right? Now, what ends up happening in good times, they've sold, this is the first time since 2008 that they're selling over 10 million units every year. Well, that's more cars. That's going to be more parts, period.
Okay.
You know, whether they're older or newer, okay?
Sure.
Bottom line is that you can see that thing is a powerhouse.
Yeah, even 3 years ago, it's more than tripled in price.
I know. Amazing. So inside the Dow Industrials now, let's go inside the Dow. It's harder to find out inside the S&P what's going on, meaning what's keeping it up.
Yeah.
But inside the Dow, what's keeping it up right now is that you get Chevron. Chevron is up a buck. United Health is up 123. Exxon is up 85, and Merck. Taken away from it is Intel and Cisco. Big Mac. Big Mac I really want to watch because it looks to me like Big Mac might have had a blow-off top. You know, I wouldn't be shotting it yet. I'd like to see that top get tested. But when I take Big Mac and put it back on a monthly basis, what happens is that you had that expansion up. It's been a huge consolidation, and you can see there's nothing up there. But I'd want it to basically pull back about 10 points first. You know, let it pull back, and then you'd go after that counter trend bounce. Now, let's go over to the gold market, because this, to me, is really intriguing this morning. So, Fed comes out yesterday, right?
Yeah.
You know,
Hopefully Lou from Nashua took that nugget, some of those profits. We were watching it at 2 o'clock.
We were watching that. In fact, what happened is that Tommy and I were in the same office when it was coming across, and we were watching your NUGT, and what it did is that the first leg down, it came down way too much
one
volume.
bar came right into the open. I mean,
Right,
the close yesterday.
Way too much volume, you know?
Well, no matter what, way too big of a bar. I mean, hopefully, like we're talking about, you had no time really at all.
Right. So now let's look at it this morning. So what do? Bottom line is that it goes south. You've got to 1150. You've done 86,000 contracts thus far. Yesterday, we hit 1152.10. You've done 187,000. So on a technical basis, bottom line is if you close over 152.20, I'm just taking the low of yesterday and saying, okay.
We're under it.
Yeah, we already went under it. So now if we go back
close over it,
it with lighter volume, it looks like that's going to be a rejection. Okay. Now, that in itself, if this was like last year, this could even be right now. And the way that got whacked yesterday, I would say, oh man, this is going a lot lower.
Yeah.
That being said, though, when you take a look at the gold stocks, it's like, you got to be kidding me, man.
Okay.
And this has been how gold has come off this bottom, folks.
Interesting, yeah.
Isn't that crazy?
Yeah.
You know, Rango Resources down 59 cents. It hasn't even, you know, an Eagle. Now, an Eagle came out with its numbers. They were big numbers. An Eagle is actually out.
That's strong. Yeah.
That's strong. And so, an Eagle, they were supposed to make 1 cent and they made 18. You know?
Yeah.
They got a good number. They beat on their top line, they beat on their bottom line. Now that's a good number in a bad, supposedly a bad price market.
Sure.
Okay? You know, what has happened, folks, inside the mining industry, which it took them a while to catch up with this, but what they did, let's say that we have a mine, okay, in our backyard. And in the backyard, you know that, you know, maybe right beside your house, you have better ore. And so what these mining companies have done, they know where there's the average tonnage. So if you take 1 ton of ore, what a gold mining company likes to do is get a half an ounce out of a ton of ore. Imagine that, just a half an ounce.
They got a lot of land that they can plow through to get those
ounces. That's right. So that's the cutoff. What they do know, however, is that they have spaces in their backyard that might have an ounce and a half.
Sure. Some high-grade areas.
High-grade areas. And so what they've done is that they are mining those high-grade areas, and they have been. I haven't gone through those numbers yet, but I suspect that's what's going on. So they've done 2 different things. what that does is that reduces their expenses dramatically.
Sure.
Because it takes the same amount of claw grabbing that out, and all of a sudden, so I suspect that's what's happening. Now, that can only happen so long,
And I'm sure you have to focus on those areas more when you're only able to sell gold for a certain amount of money.
Huge.
So they say,
Huge.
You only have limited resources, you only have limited cash flow. Let's focus on the high-grade areas since, we need to produce more at the same rate because we're selling it at less,
Totally.
as gold
Big
sits
time.
around 1150.
Big time.
Yeah.
And so that makes
And they'll
it,
make that plan as they get through that, then I guess they'll decide what to do next, right? That's,
and you got to
do
if you're a fundamentalist, you got to figure out how much more do they have and what is the grade that they have, and is there any technological breakthrough that could be out there?
And that's the difference between some of those companies and some of the exploration companies where they really get those ores that are proven
huge,
and that's as good as cash. Some of them, as you drill down to whether it's that third feasibility study and all that stuff, it becomes almost as good as cash, where they really know it's there.
It's real cash.
Yeah.
I tell you,
there's a lot of companies out there that are saying they think that they know something's where it is, and they're funding those feasibility studies. But once they have them done, it's legitimate.
Once you have it in your pocket, there's no doubt about it. I do the exact same thing just personally. No, I'm serious.
Feasibility studies.
Inside that, you know what I mean? As you go along in life, it's okay. I put that over there. That can hang there for a while. Do you know what I mean? And if you get caught up and it gets shot, say, okay, hold it. I can move that asset.
Yep.
We can move that out.
Equity and assets.
That gets you to the next level, man. 877-927-6648. Dow's down 44. Nasdaq's off 19. S&P's are down 4.5. You can expect this volatility to continue, folks. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Tommy O'Brien, Tom O'Brien. We do appreciate you growling and prowling with us out here. You have the Dow down 57, Nasdaq's off 20, S&Ps are off 5.5. And if we take a look at a few of these stocks, folks, you know, we can start out with good old Buffalo Wild Wings, BWLD.
I passed the big Buffalo Wild Wings on my way here.
I'm telling you,
I also passed the original Hooters on my way here.
Yeah, we got the original Hooters right here, folks.
They line that road, 60, Gulf to Bay.
They do. They do. Now, you know, this is pretty amazing. So you're down $30. You're at 153. Man, what a set.
That place always seems busy when I pass it.
Yeah, there's no doubt.
That's quite a chart and a pullback.
So you're back to where we were in November of 2013.
Yeah, 2 years.
Yep. And, you know, you're coming down with monster volume, man.
Yeah, I mean, did it break? It definitely broke that trend line if you go past the bottom.
It did.
You know, Bud Rolfs will be talking about maybe coming up testing that trend line again.
That's right.
Right?
No
So,
doubt.
You know, it could definitely get a pop after this.
And that's where the patience comes in.
Exactly. You let it test that bottom trend line, going across the bottoms.
Right.
Test back up there, and then maybe give yourself a good trade setup.
It's a problem. You know, the amazing thing is, as we said a little bit earlier, folks, okay, that that there's this many equities that going south. Like if we pull up NXP, okay, so we'll pull up let's see, the NXPI. Now this is a monster stock, okay, NXPI. So you know, semiconductor stock. Bottom line, and this is about, I believe, a lot of their businesses, the mobile communication, you know, infrastructure. The low for the year is 63. The high is 114. And you know, you take a look at this. Is that this is off a high of let's see. So it's off a high of 114. You know, it does a
back down to the bottom of that flash bottom day.
Right, and look at the volume on it, man.
Yeah.
What we're doing, folks, is that we're going after the August 24th swing low. And this is the danger part that I see in this market right now. That what has happened is that, so let's picture the August 24th swing low. There were a lot of stocks that seemed to me, they had registered a price point down there. But like the Qs maybe did one or two trades at 84. It was really like 105. You know what I'm saying? Yeah. So it's like when I was looking
at it, still went there, but it was a really quick panic.
Exactly. So when I look at that, I says, you know what?
Yeah. Even smart people knew right away, I think, on that day that like there were things out of whack for the JP Morgans of, you know, able to buy those shares when that market opened so low.
Totally.
I agree. They knew it was out of whack as well.
So that's given the benefit of the doubt that we even get down.
It was out of whack.
Right. But guess what? What has happened is that there are equities going down there and breaking those apart now. So it's like,
those
okay.
Those are trouble equities when you look at the markets back up at highs, right?
Totally. And what it also says to me is that the larger issue is that we can still go down there and test that low.
Yeah. Oh, for sure. And, you know, the other side of that is looking at just like a risk-reward play.
Right.
You know, I could easily see going in here looking for buying for a bounce, and just once it's at this level, you're
right.
If it goes below there, you never want to be in that.
It's curtains.
Right, for sure.
It's curtains. Let's go to Dave in Tampa. Hey, Dave, what's going on?
Tom, bottom line O'Brien, still got your peanut butter out?
Got my peanut butter out, man.
Yeah, your cream cheese too?
Yeah, why not?
Well, let me ask you something. Look at the XIV.
XIV, as in Victor?
Yeah.
Okay, so let's see what we got here. This is the Velocity Inverse Short-Term VIX Short-Term. Inverse VIX, I see, okay.
So obviously the XIB goes up when the market goes up. If you look at the XIB at where it is today compared to where the market is now, you can see it's nowhere near the highs where like the NDXs, the QQQs are. What do you make of that?
I don't like this product. The VIX product in general, right? Well, this is I don't trade it. I don't like it. The reason I don't is this: is that what happens with the VIX is that you always have to be in before the fact. Because once the VIX goes, it goes very fast and furious, okay? So, it doesn't, to me, it just doesn't give me enough clues as to, when this wants to go. Most of the time, if the market's tanking, it tanks prior to its open, right? So the VIX actually opens higher,
But you see no correlation between where it is now and how high the markets are?
No.
Because if you look at the before the downfall, it was even at par where the market was, but right now it's not even half as high as where it was when.
So with that saying, here, stay with this. With that saying, people are still nervous. Yeah, it's the same.
Right.
It's the same with the VIX. No, I understand what you're saying there.
So, right. So I'm gonna give you the benefit of the doubt there, considering where the markets are. Absolutely.
Yeah, just stay with us. We're coming right back. We got Dave from Tampa. We got Carlos from California. That's a beautiful thing, man. We got Tom and Tommy O'Brien. We're going to be right back, folks.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking with Dave from Tampa. We're talking about the XIV, basically the VIX index. Yeah, there's still. So I get your correlation, meaning that you there, Dave? Yeah, we missed him. So the correlation he was talking about, folks, is that the VIX is still slightly higher than it was basically 3 months ago. So that what that means specifically is that you do have more traders, investors, funds buying protection and insurance at a higher value. Let's go to Carlos in California. Hey, Carlos, what's going on, brother?
Oh, not much, Tom. Good morning. How are you?
We're doing great, man. Great to hear from you.
On the Tiger TV that your son is there.
How's it going, Carlos?
Well, I was in the past. I thought, what was going to happen the day Tom O'Brien retires? Well, I know what's going to happen.
Nah, I don't know. I'm just here keeping my dad company in the mornings.
How cool is that, right? I'm telling you, I'm psyched. I know, man. It's awesome.
Well, the business has to keep going, and that's for sure. He does a very good job. I saw him the other day on the program when you were in, I think you were in Nevada.
Sure.
And he did a good job. It's a good guy.
You're awesome, man. Thank you so much.
Tom, I have a question related to stock that is TV. It's the largest television chain in Mexico. They actually sell programming to Univision.
Okay.
And they were struggling since the dollar was going up. Actually, some Mexican companies are actually struggling right now because the dollar is hitting 17 pesos a dollar.
Okay.
And that's on the regular market on the street. It's close to 20.
Really? And Carlos, what is it like if we went back 3 or 4 years ago, what was the peso to the dollar then?
Well, 3 years ago was I was working actually in a city in Mexico through the company I work here in the United States.
Yeah.
And I remember when I arrived, they were paying $11.50 a peso when the dollar was officially $12 pesos and 50 cents.
Wow.
So they were paying 1 peso below the normal on the street, because that's what it matters for people. People usually do it on the street.
Yes. No, I can see that.
And I remember when I exchanged dollars, there were certain places that they didn't really want to pay me the official quote. Now it's the opposite.
Yeah, that's percentage-wise. That's amazing how big it is. Because you know what? It's really wild what has happened. It's that if you look at the actual dollar, look at the dollar index, it's not that it's gone up that dramatically in the last year. I mean, it had that run 2 years ago. But when you look at other currencies in correlation of where the dollar is, the other currencies have got croaked. I mean, you can see this here when we're talking about from the 1150 to 17, or from 12 to 20. That's a percentage and a half. Man.
Real.
That's huge.
But there's one thing, Tom, that I remember you mentioned. It's happening to a lot of companies, because I try to trade stocks from Mexico that trade in the American markets.
Yes.
And the biggest problem they're facing right now is that a lot of them have debt in dollars.
Right.
Remember when you were saying that they were putting bonds?
Yes.
And, offering bonds in dollars? Well, the biggest companies, I will say, there's another one, it's called ICA, which is the largest construction company, is struggling right now. The stock used to be $200, over $200, and now it's trading around $2 because their debt is in dollars. So every time the dollar goes up, they're getting killed.
And what had happened, folks, is this: is starting about 4 years ago, the most amount of dollar debt was getting done for 2 years outside of the country, and what that had to do with was the issuers, meaning the broker-dealer community and the banks, they could sell the debt in dollars. Investors didn't want to buy it in those currencies, and unfortunately, people went for it. And the last time I believe that this happened was about 15, 20 years ago, and it was a disaster, like it's going to be now, because when you have to pay that back in dollars, it's insane. So let's take a look at this. I'm in
at 2668, and I'm trying to keep only 100 shares on this position.
Yeah.
And I want to play it with a stop right below the 25, which is if I can check my stop, it's 25.13 right now. My stop.
Yeah. So let's take a look at it. The low for the year is 25.44. The high is 40. It's come off the bottom, and you've had. I always like when you've done two different things. So watch this, folks. The last time that had volume on the way down, you go all the way back to July 7th. And that's always a big number, because what it always seems like is that on the way down and on the way up, you can only go down so much with volume, and you can only go up so much with volume. It's like, man, they killed this stock. So then what it did is that it did test the lows, and it did it with lighter volume. We put this on a monthly for a second. So on a monthly, what I always try to find out is that, okay, what stopped it? So right there. And that's still a lot of volume. That's interesting. So 22.25, and it went to 25. Okay, well, we'll see where this shakes out. So you come off the lows with volume twice. You have to see this 29.39, man. If you can get over that level, you can get a little more juice in it, man. I mean, the cool thing about when you do have a couple signs of strength, this can be a dead cat bounce, and you can still get a pretty good bounce because it's gone down so dramatically. Do you know what I mean?
Yes.
And if you do, I guess the problem still comes down to the point that if this dollar looks like it wants to go higher, and that still can be a problem. But I think you get a dead cat bounce going at least, man.
Well, that's a good thing to hear.
That's a beautiful thing, man.
Well, thank you very much, Tom, and I'm not going to take more of your time. And
yeah, listen, man,
you're doing the good work.
It's always a pleasure talking to you,
Carlos. Take care, man.
Thank you, Tom.
Have a great one, man. Have a safe one. It's going to be intriguing here in the market, because if we don't pull back and have an expansion of volume in the market today, this thing's going to go for highs again. No matter how many stocks are down 30%.
Yeah, we're almost at a flat market.
We are at a flat market. I mean, the Dow's up 68, big deal.
No.
The Dow was up 200 points yesterday.
Right.
Okay, the S&Ps are up 20.
We're
right
above where we were prior to the Fed announcement.
Exactly.
Yeah,
exactly.
And the market was up then.
Right, and we'll see. We'll see where this thing shakes out. But there's no doubt looking at it. And inside the futures market, what we have out here, you have silver down 3.7%, gold's down 2%, which isn't bad. It's interesting when you start dealing with the higher number in gold. You're down $24, which seems like a lot, but it's actually 2%. Natural gas, we'll see whether caught a bid underneath it. That's up 2.5. You got wheat up 1.5. Corn's up 0.3. You know what came out today as this was in Europe, I believe. Let me go to the DAX. Yesterday we were talking about inflation, and they were supposed to come out with 0 in Europe, and I believe it come out at 0.2%. Not that that's a lot, but they were looking for 0.
Yep.
So we'll see where some of the higher volume stocks in this market right now. Oh, look at that. I'm in Germany. Well, let's go back to the U.S. here. So Mylan Pharmaceuticals up 233. Oh, look at Newmont. Newmont come out with numbers too. That's up $1.17. We'll have to go pull that up. Allergen, that's up $26. Now, what that's going to be inversion.
Okay.
Allergen is getting together with Pfizer. Allergen is an Irish company. Pfizer, of course, is a U.S. company. Pfizer's going to merge with Allergen and go to the island and pay less taxes. Yeah. And still want to trade under the American flag.
That's what we were talking about yesterday, right? All those Harvard lawyers.
Yeah.
Totally.
Totally, man.
That's what they're getting paid for.
That's what they're getting paid for.
Yep.
Now, let's go to Newmont. This is going to get interesting. So Newmont is trading up 121, 2036. Look, we get juice too, man. So let's see what Newmont has to say. Newmont's got to, yeah. So their sales were $2 billion. Look at this, man. Now this is impressive for mining companies right now. They probably did the same thing we were talking about a little bit earlier, getting their better gold,
sure.
Right? The estimate was. Now this is always good, folks. Okay, because you got to remember something. Gold is a much lower price. Silver's at a much lower price. Their net revenue beat. Right. Not net, gross revenue.
Yeah.
1.9 billion.
Yeah.
They come in with 2.03 billion.
They beat by 100 million.
Right.
That would be. Right.
It's not bad, right?
Right. No.
Yeah.
No. Especially when you're talking about it's only $2 billion in revenue, so that's 120. That's 5% beat.
Yeah. That's. There it is. They slashed cost, and their mines got 16% more gold.
You really got to be aware of what your costs are when you're only able to sell it at a certain price. If gold is skyrocketing, you can kind of be pushing your machines everywhere they can go and just digging the ground. But if you're only going to be able to sell it at a certain price, those guys are getting their salary because they're probably know where to drill and make sure that their costs are covered.
No doubt.
At least the good companies. That's how you're going to survive right now.
And what's really what they do have experience in is doing that because it was in a bear market for 20 years before 2002 and took off. So when you look at the aspect of where we were in the last 30 years, 20 of that have been a bear market, and the last 5 years, they'd have to tackle those expenses immediately.
If you told them in 2002 at like $300 an ounce that you'd be hovering between $1,100 and $1,200, right? Exactly. Life would be good.
Life would be amazing.
Exactly.
The sad part, and it seems like every company always does this, is that everything gets ramped up, and everyone buys everything. In Newmont, what Newmont had done, they had shotted gold at 3,400. They ended up closing the shot at, I believe it was 1050, 11. It's like, oh my God, it's sad. That cost them $5.5 billion. Yeah. $5.5 billion. You know who the CEO was then?
Who?
William O'Brien.
Oh boy.
I know. That was sad. O'Brien name. That happened there.
What company were we just looking at?
Newmont.
They're I think the CEO's name is Goldberg now. Guy Gold.
Gary Goldberg. Yeah.
Golding the gold.
Oh, I like that. Yeah. See, that's why they're doing good right now.
There you go.
Totally. Yeah. No doubt, man. So
we haven't moved much, and Dow's been down 62 points, it seems like, for the last 20 minutes.
Exactly.
Yeah.
And the longer, what happens, the longer that we stay here and don't get croaked.
Yeah. Going back up.
Exactly.
For sure.
That's all.
Thursday into a Friday.
Exactly. All it takes is the dip buyers to come in and say, okay, they can't drive it down. Let's see if we can drive it up. Let's see where this thing can go. If we go over to the dollar index, well, it was interesting talking to Carlo because that percentage-wise, that's a huge number, man.
That was a monster company. That was a $16 billion market cap company. That wasn't a small.
I know.
So I'm sure they have some serious debt if that's the size of the company they are.
Yeah, big time.
That's a tough deal.
It is a tough deal.
Yeah.
It blew my mind. The aspect of You're talking from $12 on the street to 20.
Yep.
Maybe we should go to Mexico.
Strong dollar. We can go a lot of places.
Yeah, we can. We can. I'm going to pull this dollar up. Yeah, see, the dollar's pulled back, but there's no volume on this pullback. You know, that dollar continues to, you know, it took out the B point. It's going to go to that 1.00. It's going to be intriguing then, to get that at 1.00. What are the rest of these commodities going to do? But when I look at here, so watch this. If we look at where the dollar's been, and we make this much longer, the dollar, and this is what is really blowing my mind, is that the dollar's been at the same place since January of 2015.
Yeah,
it's only a year, I guess. Yeah, it's only a year. See, that was the run.
Yeah.
The run from that bottom there of 2014. That's the thing that has hurt all the other countries. That's the run.
75 to 100.
Yeah, right. 33%.
Exactly.
Yeah. Well, monster. When you look at that aspect, 33%. It's huge.
And I'm sure they didn't anticipate that with everything that was going on inside the country in terms of finances and debt.
No, because do you remember everyone? I mean, the mantra, and this cracks me up in general. The mantra was that the USA is going to hell in a handbag.
Right.
Debt is bad. The dollar's going to hell. Well, guess what? The dollar's stronger than anything in the world.
Yep.
Like, oh, really?
Yeah.
Yeah.
And with that budget, however you feel, that's going to help alleviate those concerns over the debt getting paid and stuff like that.
You want to hear something sad?
Oh boy.
I know. So check this out, folks.
Oh boy.
No, inside that debate last night, this is, so picture this. And we talked about this yesterday, right? The day before. What I didn't realize, okay, so I'm turning 65. What I didn't realize is that, you can get Medicaid or Medicare or something. So I'm getting all these things. And I said to Tommy, I says, am I going to get this for free? Because that blew my mind.
Yeah.
It absolutely blew my mind, because it's like, you got to be kidding me that you get this for free. So that was the first thing that hit. I says, wow. I said, now I can really wrap my head around this. I said, this is like insane, okay? Because that's where the means testing come in, because that doesn't make any sense.
Right, for sure.
You stay right there, folks. We got Tom and Tommy O'Brien. We want to hear from you. Our phone number is 877-927-6648. We'll come right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. And don't forget, folks, you can get all the programming at TFNN right on your cell phone, TFNN.mobi. We just got news, I believe, that John Logan just made
John's back Monday. He's back in the States. He's back in North Carolina, and he'll be back on the airwaves. He's excited. Monday morning, 8 a.m.
8 a.m.
Rocking.
Right on your cell phone,
Global
TFNN.
Market Pulse.
Yep. And, of course, right after our show here, we get Basil Chapman's going to be growling and prowling with you. Daryl Martin, Steve Rhodes, Dave White, and we'll be back this afternoon. Let's go to Bob in Hartford. Hey, Bob, what's going on?
Doing well, gentlemen. Good morning.
How you doing, man?
A beautiful part of the country you got down there. I used to be stationed in McDill and loved it down there.
Yeah.
I live right by McDill. I live right off McDill Road, if you know, right McDill and Gandy. I'm sure you know right around that area. That's where I live.
Oh, yeah. Great. Beautiful down there.
It is.
Hartford's nice, too. So, Connecticut.
Yeah, we got
different times a year.
Color and yeah. Hey, question for you, gentlemen.
Yeah.
The three Qs.
Yep.
Are we looking at an island reversal, possible shorting opportunity there?
It's not an island reversal, because what it would have to be, what you have with an island reversal is that yesterday we had started lower and went higher. So the definition of an island reversal is that we would have gapped higher yesterday and then we gapped lower today, you know. What you do have, however, is that, you know, where you have a double top. You're topping out the futures themselves. I'm short the NASDAQ futures right now, personally, okay? The NASDAQ futures have, to me, they have double top. But, you know, the longer that we lay here, the longer that it's okay. It wants to take them out.
Are you saying double top from yesterday and today, or just from back here?
From yesterday.
From yesterday and today.
I just like not from going all the way back in July.
That's what I was going to say. You're just so close.
Right.
I mean, one thing I really like, Bob, is you're just so close to those highs. As long as you're comfortable getting out on the other side, you know, those July highs, that's a good trade. Yeah, I like that.
Yeah.
Just a pullback from those highs. I mean, so often you see it bounce right off those areas.
Right. I'm thinking short.
Right. That's that you're right up against. I mean, you know, you're right below those highs, and you're just at an area that you could set your stop right above it.
Yeah. And you know, when we started the program off, it blows my mind that we're still really flat, even though the market's down slightly, with the amount of equities that are off 15, 20, 30%. And I've seen this before. What happens is that you can get this going, and it can stay for 2 or 3 months like this, and then all of a sudden, the indices fall apart. But bottom line, they haven't fallen apart yet, And inside of that, you had Allergen this morning with that takeover. That's keeping the IBB up. So the IBB is up 374. That's putting juice into the NASDAQ composite, and the NDX slightly.
Yep. I would just make sure you have a stop if you do. I mean, Thursday and Friday, like my dad was saying, if it doesn't go down, I could see it just trickling up for a day and a half. Right. I mean, it could.
Right. No doubt.
And still that gap. We got a gap there. So.
Yeah.
All right. Well, thank you. And you're still bullish gold, aren't you?
Yeah. Oh, I'm really bullish gold. Yeah. I love what's happening out here right now. And I love it technically. I love it fundamentally because I think we're got inflation happening, man. I'm going to dig into this number in Europe more this morning. They thought Europe was going to be at 0. It's at 0.2. Now, 0.2 is not a lot, but guess what? 0.2 is a lot if it starts happening every month. That's a whole different ball game. You know what I mean? So when I look at prices, I shop at the supermarket a lot because I like cooking, we like eating. They're expensive. I don't even know how families of 4 can really afford it. I mean, they're expensive. Cooking, brother.
Thanks, Bob.
Thank you.
Okay, man. Listen, folks, thanks for being here. We appreciate you growling and prowling with us. You stay right there, man. Mr. Basil Chapman's coming up next. As Tommy just said, he just got a text, I think, or an email from my man John
Logan will be back Monday morning, 8 a.m. Perfect.
Good. Have a great one. Have a safe one, folks. Thanks so much. Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.